Good morning, everyone. Thanks for joining us digitally today from all over the world. I'm pleased to facilitate and moderate this conversation. Let me start by thanking Ziad and the WAPPP for the invitation. It's really his vision that is allowing us to all come together and have this conversation. So I'm very happy to be here. My name is Fatouma TOURE IBRAHIMA. I'm the practice manager for the PPP group of the World Bank. And I am equally pleased to facilitate and moderate the conversation of such a distinguished panel of experts on a timely topic, which is the next level of PPPs. But more specifically, what are we asking ourselves when we are talking about PPPs? Very often we need to be ambitious, but we also need to be realistic. How do we fund? How do we finance? And how do investors regard next level of PPPs? These are the type of questions that we are going to ask ourselves today. And we all know that PPPs are a tool for development. In going beyond financing, PPPs become also means of delivering social services, protecting the environment, and improving the standards of living. At the bank, we had recent conversations about transformative trends or drivers of infrastructure PPPs. And some of the conversations we've had were whether accelerated demand for innovative technologies and high quality, affordable broadband access, climate responsive and reliable transport, the transition to decarbonized, greener energy supply, the need to operate under deep uncertainty due to unpredictability of the climate change scenario. Are these questions going to force a paradigm shift? So the objective today of the panel is really to discuss how investors view next level PPPs and focus on related issues such as the potential complexity that is inherent to PPPs and whether we have additional filters. So do they see the ESG, people first, SDG relevant approaches as adding too much complexity to PPP projects? The second question that we will ask ourselves in this conversation is whether the critical importance to address sustainability issues in PPPs are an issue of concern. Tendered without regard to ESG may not be sustainable. So how do we answer that question? How do we also answer the question of capacity of the public sector to support sustainability and recognize investors who do include resilience, sustainability, or are trying to be ESG compliant in their proposals? So we have planned for about 30 minutes of a moderated discussion among the panel members, and we will make sure to allow adequate time for Q&A. We will try to have maybe 2 or 3 rounds with our speakers, and given the time that is given to us, let me start by introducing them. I would start by François BERGÈRE, who's the Executive Secretary of LTIIA, which is the Long-Term Infrastructure Investors Association. And François has a very diverse professional experience in the field of public management, project and infrastructure finance, for having worked as a senior auditor at the French Supreme Audit Institution. He's been a manager of multinational equity investment funds in infrastructure. He's formerly a colleague. He was my manager at the World Bank for the Public-Private Infrastructure Advisory Facility. So it's a pleasure to have you, François. We also have Helmut von GLASENAPP, Secretary General of the European Association of Long-Term Investors. He's the banker with operational experience in debt, private equity, venture capital. He has really built experience on mezzanine and innovative financing, SME financing. So again, a very diverse experience in the European Commission at the Directorate General Enterprise and Industry. We also have with us today Koffi, who's the Managing Director at Africa 50 Infrastructure Fund. Koffi is a recognized expert in infrastructure development with a solid track record in structuring and financing private in fact, and financing private and public-private projects in Africa and other emerging economies. Welcome, Koffi, another former colleague from the IFC. So really today we are among ourselves, but with a larger group to have this conversation. And I think we can jumpstart the conversation. And I will start with you, François, with what is really bringing us together here. And from the perspective of the long-term Infrastructure Investors Association, you have members that are mainly institutional investors and fund managers with responsibilities over long-term infrastructure investments. So the time dimension here is critical. So do your members see ESG, people first, SDG relevant approaches as adding too much complexity to PPP projects? So this is really the first question that we want to start the conversation with. Or do they consider it to be in line with their ESG and CSR commitments?
Thank you, Fatouma. Yes, indeed, LTIIA was founded 7 years ago to convene those investors, whether asset owners or asset managers, sharing the same long-term DNA and aiming for best practices in ESG, in particular, when it comes to their assets. So practically, it means that they have a long-term horizon, typically 15 years or over. It's called the buy and hold approach to investing in infrastructure. And of course, the longer the hold, you hold an investment, the likelier you may encounter some kind of ESG downside event that would affect your financial returns or damage your reputation. So ESG is very much a part and parcel of our approach and philosophy, I would say, when it comes to allocating resources to infrastructure investments. And our mission statement, if I may say, at the association is indeed to facilitate and promote investment in infrastructure, which enables long-term and sustainable development of communities and countries. So again, no question about this. ESG is very much, it's no longer a nice to have approach, it's a must-have approach for most investors and certainly all of our members. Now, in terms of complexity, I don't think that this issue is seen as a blocking blocking stone for our practices. In any case, most asset owners, the likes of insurance companies, pension funds, or retirement systems, they would go through asset managers, dedicated and specialized infrastructure funds, who's supposed to have this in-house capacity, not only to manage bids and procurement, but also to sponsor, develop projects, and incorporate as early as possible these ESG dimension. And again, we see it as a key dimension to ensure long-term viability, resilience, and to de-risk, frankly, the projects, not only against well, technical or climatic events, but also politically, since it should end up aligning interest of all the stakeholders. So complexity for us, and I'll end here, is more in having to report along multiple fragmented frameworks, standards, and tools. We do need, on the investor community side, we need actionable, practical, and consistent standards and frameworks when it comes to ESG. Eventually, the market will winnow out, and will hopefully a limited number of standards will emerge. We'll progress towards common metrics and language, but it will take time. And this is something that we are working on at our level by participating to different industry-led initiatives to try and standardize or harmonize ESG tools and standards to be used for our business.
Thank you very much, François, and thanks for reminding us that this is really a must-have. You've touched upon, the capacity of the asset managers to also be in a position to assess these requirements and the consistency part of the standards that need to be applied. So following up on that, I would like to invite Helmut to maybe share his perspective from the European market. Are there any specific areas that need emphasis or focus?
Yeah, thank you very much for having invited me and to discuss a bit the situation in Europe. In a way, I'm the public cousin of François because the members of the European Long-Term Investors Association, these are public promotional banks and institutions. So the shareholders of our members are national governments, and our members are implementing public policies in their mission. And coming to your question, looking on the European market, I would state at first that for PPPs, we continue to see a separation in the PPP market. We have the UK and we have the continent, and things are quite different in these two areas. And this is even more true after the Brexit. PPP's reputation on the island is much better compared to continental Europe. On the other hand, looking on the continent itself, we see different situations in more or less each and every member state. The good news is we have no separation between East and West, and that there is no separation between North and South. But we have really specific situations in the different countries. Let me take two examples. The one is energy. Poland's energy production relies on coal and lignite today. More than 80% of the energy is coming from this energy source, and you can imagine that saving or reducing CO2 emissions is very different for Poland compared to other EU member states. Another example is Greece in the field of energy. The Greek government is struggling to bring energy to all the islands we love to go to during our holidays. And bringing energy to a small island with 2,000, 3,000, 4,000 tourists for 3 months is really a challenging part. This might illustrate that the situation in the member states is quite different, and we can't say there is one European market. If I would continue with this example of social infrastructure, we saw during the pandemic that the health systems of some countries were better prepared for the pandemic compared to others. So again, here is a very different situation in the European market, and I think there is a lot to do in the years to come. And this is for the financing of climate change, first of all. As public investors, we are providing finance in the interest of our shareholders, as I said, the national governments. But we see that public entities at all levels, they don't have enough money. They have empty pockets, and so they are looking for promotional institutions to leverage the resources they have. And in a way, public investors, as national promotional banks and institutions, have to structure their activities that it fits with the needs of private investors. Otherwise, we will not manage to bring private investors in projects they don't go for in the beginning. We do this by providing incentives for private investors. We provide additional financing or risk-taking. That's very good and very efficient. And the financing structure has to be in line with the needs of private investors. It does not make any sense to go into projects and say that's what we are doing and come with us or leave it. We have to speak the same language as the private investors, otherwise it won't work. Another topic I would like to mention is the issuing of green, social and sustainable bonds. And we see that there is a constant growing demand for these kind of papers from our members who are issuing green, social or sustainable bonds. This is a very positive development, since many institutional investors channel their money via bonds from national promotional banks and institutions into these projects. On top of what François said, it's a must. They are looking actively for projects, but there are other institutional investors who don't go into the PPP activities, and this money is used for sustainable projects as well. We have here in the European Union a long lasting discussion about sustainable finance, and in a way we see ourselves as front runners in a way that we started to define what is sustainable financing, because we would like to avoid the so-called greenwashing of projects. Everybody says we are doing good things and continue to do as we have done in the past. In the bureaucratic language, this is called taxonomy. This approach will lead to more transparency for investors, and it will and we have to look that this taxonomy will be in line with the needs of investors, be them private, be them public, but also with the needs of project promoters all over the place. And here I think, first of all, for smaller projects, we see many smaller projects from small municipalities. And here we have to find the right balance to bring transparency on the one hand and the possibility to implement the projects on the other hand into a good balance. Overall, I think that sustainable finance, ESG, social infrastructure is a huge chance for Europe, and it will create growth. It will create growth and new and different jobs, and this is one of the drivers for public investors at the national promotional banks and institutions to go into this field. Thank you.
Thank you very much, Helmut, for this great overview on the challenges, but also opportunities. I'm pleased to hear you bring a little bit of realism in the work that we do, with governments not having, or shareholders in general not having enough money, empty pockets, but also the opportunities to have green, social, and sustainable bonds going forward. Thank you for that. And both you and François' presentations exposed areas where the private sector could innovate or approach it to build and finance infrastructure. So I would like to turn to Koffi based on that and really seek his views on concerns that PPP projects tendered without regard to ESG criteria and their sustainability. So Koffi, I would like to hear your views on that. Thank you.
Yes, thank you, Fatouma. Look, investors have a bad reputation when it comes to ESG, or they used to. In the past, it was clear that incorporating ESG was a major factor, and the investors would consider them to be at times very costly. And they didn't get into ethical debates. The bottom line was really what was important. This has changed quite drastically, I would say. Today, in PPPs and in infrastructure mostly, we at Africa 50 do only infrastructure, hard infrastructure. Most of the investors themselves incorporate ESG factors in the way they work. So they look at projects through that lens. They will typically be very sophisticated. They have rules. They consider the management of potential risks associated with the project, reputational risk, as François mentioned, which are quite important. And they will go beyond whatever requirement there is. So the concern is not really that the project tendered without ESG may or may not be sustainable. The problem is whether the countries will attract the right investors, because if the projects are not rightly proposed and procured with ESG metrics, they won't participate. What we have seen is the challenges that some countries have in terms of tendering projects that would have the ESG metric. And in a certain sense, the ecosystem of implementing projects, financiers, etc., that ecosystem takes care of it. Lenders play a very strong role in ensuring that even though in the procurement process there were no ESG criteria, that the minimal ESG criteria be respected. When you look at infrastructure, I mean, we all know the World Bank, the IFC, the African Development Bank, all of them have safeguards, performance standards that the lenders apply. So even back when responding to a PPP tender, the project financiers know that they will have to abide by these rules. And finally, I would say, if projects are tendered without them, it's also a signal that the investor takes and weigh in terms of considering whether the project is well structured. If there are no ESG requirements, what does that say about the project? How can this project really work? And what does that say about the entity that is trying to procure the project? And typically, good investors that have money and that have the ability to implement will stay clear of projects that don't have these things. Finally, we have entered actually an acceleration phase in terms of project ESG in tendering and procurement. With the pandemic, we have seen many countries being even more careful about putting these criteria and making sure that they can attract investors and implement their projects in a way that's sustainable.
Thank you very much, Koffi, and you've really shed light on the importance to look at the issue both from the upstream to the downstream project level, and highlighted the importance of the ecosystem, what the ecosystem plays into this conversation. And since you have the floor, I would also like to ask you whether you think investors view the public sector entities are doing all they can do to make sure that the projects are sustainable, and that the tendering process does not necessarily discriminate against investors who are trying to include resilience and sustainability in their proposals. Do you see that happening? Should there be more lobbying for PPP project studies to include full environmental and social impact assessments? And you mentioned the work that the institutional the multilateral institutions and development institutions are doing to push for safeguards. But do you think more needs to be done in that regards?
Yeah, thanks. Look, we know, working, at least that's the case in most of the countries that we cover at Africa 50, which are African countries, although you have a mixed picture. I would say in general, the public sector entities do a little or do what they can to include ESG and make sure that projects are sustainable. But local standards fall short of international standards. So you could say from the perspective of investors, it's not enough. Now, you have also to factor in the fact that local regulations are what they are. They are probably a little bit behind in terms of what is required. So the perspective is it sufficient, and from the perspective of whom? The countries think that it might be enough, they're progressing. The ecosystem, as I mentioned, think that it is not enough. Now, there are challenges indeed for many African countries to push for more sustainability within the tendering processes. One is sovereignty. We have our own laws. We want to follow our own laws. There's no reason for us to implement international standards. This is where the ecosystem comes in play. We bring the money, we bring the strategic sponsors, and we want, I would say, a higher standard to be put in there. So that's one, there's sovereignty, but there's also a question of cost, and I think that was mentioned by Helmut, I guess. Most countries don't have a lot of resources, and even though on paper ESG and sustainability is part of the tendering process, the challenge is how is it implemented, how is it controlled, and how much does it cost? Looking at infrastructure, you can think about resettlements and all those work streams that cost a lot of money. Countries have a tendency to try to reduce that cost, and so they're between a rock and a hard place. They want more sustainability, but they also have limitations. So I would say that we've seen a lot of progress, however, and the picture is quite mixed. You have countries that indeed do enough, and there's some countries that do less. But the countries that do less basically have less projects that actually get to the finish line. And in the end, that's the acid test, and which will push them also to move forward in terms of tendering process. Now, understanding whether that can discriminate or not against investors that include resilience and sustainability. In a certain sense, it's a self-selection mechanism. If an investor needs or decides that they have a certain standard, if the project doesn't meet the standard, well, they'll self-select and not apply. It's adverse selection. Obviously, those who have less concerns will do the project, but the project wouldn't be up to the standards. But that's also for the countries to decide. And in the end, that's the biggest question. What is it that they want, and what is it that they believe works for them? And that's a big question. We've seen when looking at tendering, at times, they feel that there's a large degree of imposition of sustainability or the way it is viewed on them. It's not drafted by them most of the time. It is forced upon them. So there is a balance to be struck between their needs and the whole, I would say, sustainability, ESG thought process, and they have to buy into it. It has to represent a real plus. When they see the plus, they implement. When they don't, they are more resistant.
Thank you very much, Koffi. This is really a very good presentation on how mixed the picture can be. And I like your line about sufficient for whom, and how it relates to cost. So maybe we need to stay a little bit on the cost aspect of it, and I would like to seek Helmut's views on that, and really ask the question about could resilience building adaptations be less expensive if incorporated in project cycle early, or in the design of the project upstream? So that's a question that I think, some of our audience members would want to hear about. So over to you, Helmut.
Yeah, thank you. With regard to let's say the power of governments, I couldn't agree more at what Koffi has said already. I think there should be rules, but they have to be implemented in the end. And I think it's not the governments who are implementing. These are always people, because we have a wide range of privately driven projects, also public projects, but public projects not at the national level, but at lower levels, and here it has to work. So the challenge for a public entity, for a government, is really to start the mind shift of people planning and designing these kind of projects. Here, at least here in Europe, we see a lack of know-how, and this might bring a bit more complexity into this. We see a huge need for advisory services for project promoters in Europe, how to include in an efficient way the needs of a sustainable finance regulation of ESG aspects into this. I think this is one driver to reduce costs. And as I said earlier, we have to think about the smaller projects as well, because in many cases we see that you have things to do to integrate into the projects which are not dependent on their size. So for smaller projects, this is much more expensive compared to bigger projects in the relation to the project size. So here we have, as I said, to find the right balance. It's true that if you have a stable set of rules, that is much easier to implement them, and by this it will help to reduce costs as well. If you are a project promoter, or I think for all the investors as well, you have a stable set of rules, and you know if I'm planning this and or that project, and it will not change during the lifetime of the planning cycle, this helps a lot. But we see quite often that discussions start, and then things are under change for very good reasons, for very good intentions. Public authorities intend to do things better, more efficient, but here we have again to find the right balance for projects under construction. And the challenge is, on the other hand, I can see this, that this is sometimes a quite dynamic process. If you think about housing, that's something we understand as individuals perhaps a bit better than a complex infrastructure project. But energy efficiency in housing is really a very dynamic process, because you have technical progress all over the place, and then we would like to include this technical process or progress, sorry, the newest technology into our construction. And public authorities tend to do the same. So again, here you see that the planning at the beginning might be different as what you have to implement after 6 months' time or 1 year's time. And this is the same for infrastructure projects. We need a stable framework within our for our projects. Yeah, I will leave it here. That's I think the most important element.
Thank you very much, Helmut. I'm trying to be mindful of the time, and maybe approaching the end of our discussion with the panelists. So let me go to François for perhaps the last question on how we can align and these challenges in funding and financing of PPPs. The two elements of funding and financing.
François, you have to
You're mute.
It doesn't seem to work. Can you hear me?
Yes, I can hear you now.
Yeah, let me first highlight that as investors at LTIIA, we're really agnostic about the contracting mode. I mean, our members can invest in obviously contracted infrastructure model like PPPs, but they also invest in regulated utilities or merchant infrastructure. So we don't have a sort of a focus on PPPs. Indeed, the very notion of PPP has somehow, and Helmut was referring to it in Europe, become a bit controversial for some of our investors. But I believe what we're discussing, that the need to incorporate ESG and make sure we align interests of various stakeholders would apply in any case, whatever the contracting mode. It's really relative to the project scope and design. So having said that, in terms of aligning with these issues of funding and financing, yes, I think there's certainly things that investors can do. It's not under their exclusive control. Of course, governments and multilaterals and regulators have a shared responsibility. But I would think investors over the last period have been keen to seize and appropriate these new tools, these new references linked with ESG. And let's just see, for example, how UN SDG were initially set up by and for governments have now been appropriated by many private investors and followed and reported on through internal or proprietary reporting system. So it just tends to show that indeed institutional investors are eager to go further and quicker beyond minimum requirements to align by the top, if I may say, and not just accompany the trend, but pioneer it, precede and complement it, if only to avoid that governments step in and dive deeper and maybe take some steps that would not be seen as comfortable or appropriate by private sector investors. So this, for example, what's behind industry-led initiatives like Fast Infra or the Alliance of Asset Owners Committee when it comes to ESG frameworks or sustainable infrastructure labels and platforms that are being currently worked upon and to which LTIIA is contributing. Again, I may have mentioned this, but most institutional investors, due to their fiduciary duty, the very long-term nature of the liabilities, are mostly risk adverse, which means that they're aiming for low risk. It's not just a question of appropriate risk return. They wouldn't go for a higher risk even if it went with a higher return. So the real question is about de-risking a number of these investments, and particularly in emerging markets. And ESG, in my view, and SDG can be a good way of doing so, because again, a viable, sustainable project aligning interest is the best protection, as I would see, against not just technical but political risks as well. So all of this goes into the right direction. It may take time for all these initiatives to converge and the various standards and frameworks to be harmonized. Let's just remind ourselves that it took decades in the financial accounting sector for the IFRS to be adopted as a universal set of standards. So it may still take some years, hopefully not decades, when it comes to ESG and SDG, but certainly institutional investors are keen to do their bit and contribute to that process. So I think that's the good news. The fact that investors are ready to and eager to invest in sustainable infrastructure, even ready to pioneer ahead of governments or multilaterals requirements if need be, because they know basically it's in their own interest. And that what they will effectively achieve will eventually benefit the bottom line as well. It's a matter of having this kind of comprehensive view, which is now, I believe, widely accepted among most institutional investors.
Thank you very much, François. And I think you're really addressing the first question that is coming in the chat. And in the interest of time, let me present all three questions. One being on the need to standardize and have a uniform labeling system for ESG compliance, and what does it mean? The second question relates to practical examples of how green sustainable bonds are used in PPPs. There's another question that just came in on the conversions and how there could be conversions in markets. So I would like to maybe pause here and have a last round with you, if you would like to address one of these questions. And let me start with Koffi and Helmut, and then with François. Koffi?
Yes, thank you, Fatouma. So maybe I'll take a crack at the first question, the need to standardize labeling systems. That's a very good question, indeed. We have many standards, and they evolve in their own way, depending on once again, who is behind it and who supports it. And the real question is the building of a consensus around sustainability and ESG. Once we would have that, the question of standardizing will become moot. But as long as behind the labeling of ESG are other motives, the standardization will be a problem. But I do agree that would be helpful. That would allow most of the players to really understand what doing and not just ticking a box. But once again, it's like many of the standards and many of the processes that we have. There are various environments, various situations, and it is at times difficult to get single labels.
Thank you very much, Koffi. Helmut, any last words?
Yeah, I think standardization is key because institutional investors would like to know in what they will invest in the end, and if there is a difference between countries, for example, there might need to be a disadvantage for those whose standards are not seen as appropriate in this field. So for raising money, I think that's an important point. Examples for using money from green bonds. This is exactly something we are discussing here at the European level with the taxonomy I mentioned before, because the definition of technical details, that's again something which is of high interest for institutional investors in this field. The pure, just to say we do good things, this doesn't seem to be enough. We have to be very clear on this, and I think that's a good initiative for the sake of transparency.
Thank you very much, Helmut. François, any
additional? Yeah, just a final word on this issue of convergence. Indeed, FAST is a very interesting and ambitious initiative under the auspices of the One Planet Lab, an industry-led, a marketplace-led initiative aiming to get to a sustainable infrastructure labeling system, as well as undertaking targeted interventions and financings. But speaking of labels, again, and Helmut was mentioning that as well, we have to be cautious about not superimposing additional layers. And just to take an example, most of our members in LTIIA are European-based or operating in Europe. As such, they already have to comply with the EU taxonomy, the task force on climate-related financial disclosure, SFDR, and a few others. If we add another layer that is not somehow Inspire related to that, I believe that there was the concern to try and build as much as possible on existing building blocks like GRESB to get to that label. But we have to be cautious about not adding just yet another layer of complexity. Otherwise, it may not get much traction in the marketplace. So still a work in progress, but one certainly that is a key importance for institutional investors.
Thank you very much, François, and thanks to all the panelists on a great conversation on how do investors regard next level PPPs. It has been a very rich discussion that I will not try to summarize. I will just maybe highlight the common threads among your various conversations, which really includes standardization, standardization, standardization. I like the fact that, you know, we emphasized this is something that we must have, not just something nice to have. The variety of issues in different countries, the resource constraints that have been mentioned, but also the innovative parts of the green, social, and sustainable bonds, the taxonomy. So all in all, this brings us back to where we started on the fact that PPPs are really a development tools, and we need to look into the resilience building, which may actually be linked to cheaper options, and the importance to look at things from a full life cycle approach. So again, thank you very much for a rich conversation. Let's keep the conversation going. And thanks again for WAPP for inviting us to have this conversation. Thank you very much for the opportunity.
Thank you very much. Thank you all. Bye.
And see you soon in another context.